Let's start off with what is almost bordering on the ridiculousness here with regards to the GameStop trade, a trade that some people say at some point probably started off with a real fundamental valuation type of assessment that is now just basically seems like it's kind of a tit for tat between the day traders, the retail traders, and some of the short sellers out there. What do you make of it?
Get prepared for another round of short squeeze. So the original folks that shorted this stock have been taken out, only to be replaced by those new investors that more or less, Romaine, said what you said, which is that this is just a bricks and mortar company. There's nothing new. We don't care about new management. And we're going to short it again. And that's why you see the short interest still at $4.3 billion. But there's something new here, which happened on Friday, which really is, I think, something we really need to keep an eye on as market watchers and as a data company, which is that, Andrew Leff comes out and he says, hey, the stock's overvalued. There's nothing really controversial in that. But what happened is that this caught the eye of the Reddit army, and they really went after him. They went to intimidate him and went after his family and sent packages. And there was a whole height of harassing him to the point where he feared for his own personal safety. So this is something new where you see vigilante capitalism go from the halls of our capital to our capital markets. It's something new, and I think we need to really keep an eye on that because it's all about liquidity, and it will affect liquidity eventually.
Bob, of course, no one wants to face threats, and we thank you for raising that sort of attention, but unfortunately, that sort of threat online isn't new, and online social media attacks aren't new. What is new, though, is more perhaps how much companies who short certain stocks, or indeed institutional investors as a whole, need to pay more attention to what is going on in these sorts of, perhaps they're retail, but some of them are really rather professional traders that happen to join these sorts of online platforms, because this isn't a new thing that they've been focusing on GameStop. They've been talking about this company almost for years now. It's only now that they're starting to turn the attention of the short sellers. Do you think this is something that short sellers are going to start factoring in?
Well, it's hard, right? So what you're really saying is that if I'm a gamer and I like crypto and I like cannabis, it's a lifestyle. And, I don't care what the fundamentals say. It's what I know, and I'm going to buy it because I feel like I should buy it. And so you have a whole new sector of investors that use Robinhood, use the WSB, the Reddit thread, to invest in these stocks. And it's this real kind of irresistible object versus the immovable force. And what's happening is that the retail right now is stronger, but the short bets come back and fill in. So it's just a battle that's going to continue. You're going to see GameStop go way higher.
Is the game and some of the games that the short players are playing, is it too soon to say that the game is permanently changed?
I don't think so. It's kind of like you grow up, you see these things. We've seen this before 20 years ago. I wrote a book that's behind me 100 years ago. The New York Times put out in their front page story about outing the name of every short seller. And it was on the front page of the New York Times, and it was a disaster. And, these things happen in capital markets. But what's new is the use of intimidation to silence financial opinion. That is new. And why that's important is because there's been a lot of talk in the halls of Congress about disclosures. We should have the same type of disclosures for short selling that we do for long investing. And you can see what would happen here. The very people that would benefit from the liquidity that short sellers actually create would be harmed in the end. And that's why it's so bad, is because at the end of the day, when these stocks do pop, and they will, what'll happen is that Mr. Left is going to be the person actually providing the liquidity. You may not like the price, but he's going to buy back his stock, and he's going to give liquidity to the people that actually need it.
Yeah, I mean, it's a great point there, Bob. And I mean, as your book, which wasn't that long ago, it was like 10 years ago when that came out.
That's right.
I mean, it's a defense that has been made before, and we know the short sellers. I mean, we were just showing on screen there that New York Times front page from back during the Great Depression, effectively, or preceding the Great Depression, where they blamed short sellers. And we all know about how the NYSE president was dragged before Congress and kind of that charade that went on there. And of course, Herbert Hoover blamed his whole collapse on the short sellers out there. At the end of the day, though, there is sort of an adage here that short sellers never really die rich, right? That at the end of the day, they are the ones that end up on the losing end of this. When you're up against, when you take a sort of an established investor, presumably with fairly deep pockets like a Citron, and you go up against a bunch of individual day traders that have basically managed to pool their own resources to try to squeeze him out or whoever they think is behind this, what's the sort of end result of this? I guess who loses in the end? Is it going to be the short sellers, or is it going to be all these people now who are, for some reason, long GameStop, at $90?
Well, people short stocks for a lot of different reasons. I think if you look at the rise of the pod structure and hedge funds, you see that they short stocks to cut risk and have done very, 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 very well. So I don't necessarily think it's a losing game. It's how you use the tool. But in this particular case where it is, I would say one person versus another, or a representative of a style versus another style, short selling is a very, very, very hard game. But the point is that, our company democratizes this information. There's no need to go after a person personally because the information is available. You don't care if that Andrew Left is shorting the stock. What's he going to do? He's not big enough. He's not $4.3 billion.
Yeah.
It's kind of ridiculous. The information is there to be used as a tool by everyone so that you don't have to resort to these type of tactics.
Quickly here, just under a minute. Do you see a situation where the SEC is to get involved to talk about market manipulation?
Well, I'm not going to speak for them. Maybe have them on and talk to them. That's just not our place in the marketplace to talk about regulation. I think, though, that when you start fooling around with liquidity, we're in a really euphoric time. And when you start just ignoring the real underpinnings of the market structure and saying it's okay, I think you're asking for problems later on.